Well, even as markets hit record highs, some names aren't seeing much love. One investor's trash, maybe another's treasure. Carter Worth's over at the Plaza to do some dumpster diving. Carter, what are you looking at?
Well, that's it. Today's opening report for clients was just that, titled Dumpster Diving, things that are basically going straight down versus the equity market in general, which is going straight up. And do they represent an opportunity? So 5 names that have basically are so bad they're good, but they're starting to bottom. So you know what these people do, whether it's mac and cheese or ketchup, and you also know what its chart has done, which is straight down and to the right, but just starting, yes, and I'll zoom in here a bit, just starting to break above the downtrend line. Okay, let's go to the next. Ready? Same picture. I mean, it's almost though I didn't change the chart. It's U.S. Steel. You know what they do. They're a steel company. Same thing, just starting to break above the downtrend. But the common circumstance is these are all duds. It's dumpster diving. These are things that have basically been going down for 2 years as equity markets are making noise. But each has just started to perk out above the downtrend line. 2 more. Freeport, again, same circumstance. Let's zoom in here and you can see it just ever so slightly getting above the downtrend. And then finally, GE, which is quite a bit more above its downtrend. So consider those 5 names. Obviously, there are a lot more in the report. And consider the following. Names you know, decent market cap, U.S. Steel being smaller, but in total, $210 billion. Now, this is the setup, the 1-2 setup. What we know, and we've seen it from the charts, is that look at the 2-year performance. I mean, think of it. Equity markets are up at all-time highs, and this down 61, 52, 40, 17, down, down, down. Okay, that's the setup. And then the leg up is this. Now flip it around. Look what they've done over the past 3 months. Again, market's done this. They're all outperforming. So you have the 1-2 setup of great weakness followed by recent nascent strength. And here is a basket of that group. I think there's several ways you can do this. You can call this a double bottom. You could also get rid of that and call this the prospective beginning of a head and shoulders, but put the same line in and just ever so slightly, let's zoom in, this group, as a group, that 210 billion is moving above the downtrend. I think dumpster diving between now and year end will be the place to be.
Carter, come on over.
Bring him in, of course.
Young Will bring the chair.
Now, as Will brings in, you know, Will also went to the Harvard like you did. That Harvard-Yale game, historic in nature. Not because of the halftime thing. The game itself, I know you watched, didn't you, Melissa?
Every second.
High score.
You know.
Yeah.
Hey, Boomer, what was it like in the 60s when you used to go
Anyway, so for these breakouts to occur, does the backdrop have to be a rising stock market?
Not necessarily. So there's 2 things that happen when you have a fairly extended general equity market. Money gets a little bit, well, annoyed or desperate and says, let me find something that hasn't come to life. Let's go and play the laggard. So that typically happens as you're reaching the mature stages of a big run in the market. Laggards get played. Now, one could say, okay, this is the whole value growth subject. It's not really anything. What it is does U.S. Steel versus Microsoft in the next 36 months, Microsoft will kill U.S. Steel. Will Caterpillar beat Google in the next 36 months? Not a chance. Will any of those duds beat great growth stocks? No. But can you make more money now in the next 3, 5, 6, 8 weeks? Just as you just saw there over the past 3 months, these stocks are killing the market, right? So the setup of great weakness followed by emerging strength, typically that kind of turn, that momentum can be played.
But Carter, so of the 5 names you picked, 2 of them I think are recovery stories. Kraft and GE are certainly
they're all
places,
idiosyncratic.
But I would make an argument as much as Freeport and X and Schlumberger have their own also idiosyncratics. I think they could be traded as a group, and I think they could be traded essentially with some stabilizing of commodity prices and a global cyclicality. Do you see that going on across that space? Because
not really
those 3
happening
are
in energy. It's not really happening in copper. You look at the price of copper. So it's. I mean, and I picked those because they're big names that people know. The list was quite long, right? 300 and 400 names. And a lot of them are small cap. In fact, that is the nature of dumpster diving. You're typically finding fairly small names. The median price in the list is about $2 billion market cap. That's a fairly small stock.
Carter, what do you think? There's another group that's in the dumpster. It's the Uber, it's the Lyft, it's the Slack. Okay, these were 2019 IPOs, well off of their highs and well off their IPO prices. Could you see any sort of seasonal effect in the last month of the year where a lot of people might have vested interest in seeing these higher?
Yes, all of those, without exception, are basically super duds, right? Pinterest, Beyond Meat, Uber, Lyft.
Duds and super duds.
Super
Whole other category.
But as opposed to these long-term duds, which are at least showing us some life, meaning the chartist is a coward. I want you to go first, and I'll be right behind you. I never want to buy a stock just in a gross downtrend, and that's what those stocks
Although Lyft's up 30%.
Well, what I'm saying is they look like they're trying to bottom near term.
That's almost too nascent, right? That's only a day or two. I wanted to show that basing bottoming action that would suggest it's got a little more traction.
But just to quickly tie it back to the original conversation we were having at the top of the show with the IWM, are those, you mentioned smaller cap stocks, that's what made up the list primarily.
That's right.
Is that what we're seeing in the Russell
so
overall?
if you look at what's so curious about the move today in small caps, which is what happens when speculative action or risk on is going on, growth outperformed value. That's the real tell today, right? The Russell 2000 is got a big weighting in banks, which is value,
Right.
and yet the IWO outperformed the IWN. And that's very interesting because it wasn't, quote, value that outperformed growth today in small cap.
All right, Carter, thank you. Carter Braxton Worth.
Love Carter Worth. You know, you have a major, he did not mention Carter, and I'm not bringing him back, but you have a major double bottom at 8.5 in Freeport McMoran, and we have actually talked about that. Bank of America Merrill Lynch is upgraded at $14 price target. You say that's not a big deal. Percentage-wise, that's a big deal from here. It's a 20% move. I think you're going to see it. And U.S. Steel, which has been awful since March when President Trump announced the tariffs, went from 45 to 10 in a straight line. That's another stock that I think can bounce. And he mentioned nascent twice in an 8-minute span. I think that's a penalty.
No, I think it's a wonderful word. That's, you know, it should be used more.
I know what it means.
No, he means
Anyway.
he's.
He went overweight.
I know
He went overweight on it.